We're hearing from the Chinese ministry that there are not ongoing talks. They're warning of a recession, but it seems that it's not being ratcheted up as quickly as it could have been. Are you confident that it will de-escalate?
Well, I think that we'll get de-escalation over time, but for the moment, it would be great if talks resume, but it's pretty clear that the U.S. president believes this is an issue that can help him into the fall election. And with the U.S. economy booming, this seems to be the time where they want to push the case.
Okay, but so does it mean that his rhetoric actually stops after the midterms, or is this actually just, President Trump following up on candidate Trump? This is what his promise is based.
I think that it's a mix of both, and I think that the markets believe that eventually we'll get to a deal. But we're in a risky period now because we don't know how China is going to respond to this, because they can't respond just with tariffs on goods. And then, so what are the secondary effects that might ensnare U.S. corporations? But I think the immediate concern maybe for next week is on earnings, and then how do U.S. companies, as they start to report, start to bake that into the outlook.
So, Mark, how do you actually break it down? Is it industry groups? So do you, for example, model if, China retaliates on tech stock, what that does to U.S. technology companies? Or do you take a broader view about, if this goes up a notch, then it means that it's deflationary and central banks will have to do something?
Well, as you know from looking through the list of new tariffs that involve, fur pelts and bull semen and all kinds of different things, it might be hard to analyze it by individual commodities. I think one of the things to look at is just how much this does start to touch the U.S. consumer. And it gets complex because, of course, the fall in the yuan means that the U.S. purchasing power actually for the consumer could increase a little bit. So that's how we're looking at it. But I think another thing to keep in mind through this is just how strong the U.S. economy has been doing. And the real driver for markets over the past few weeks has been that strong employment outlook in the United States.
But does China ever use the yuan as a weapon in the trade war? This was the big question last week.
Well, right now they're saying no, but we've seen the move. So it's do you follow the words or do you follow what's actually happening? But I think that's been considered to be a nuclear option. So I don't think that they're headed in that direction. They still have both the chance to negotiate this. Also the chance to work with Europe now and come up with some better trade relations, and then also, of course, to deploy measures like that at a later time.
Okay, what does it mean? What's in your ideal portfolio?
Well, I think that the ideal is a challenge at this point, but I think that we find it very difficult to go underweight equities at this point because of the strength of the global economy and particularly that strength in the United States. And so we're still overweight in equities. And then we also versus high-grade bonds and also high-yield bonds in Europe. And then we also like dollar-denominated emerging market sovereign bonds as well, where the spread is still very strong.